Euro dollar. So not much going on with the euro right now as it continues to consolidate off recent 11-year lows from 1098. The market right now is locked between roughly the 1265 area and 1535 area, and a break on either side is going to be required for the next clear directional insight. Overall, the market continues to be locked within a downtrend, and while it holds below the 50-day moving average, this downtrend remains firmly intact. So there is risk for additional upside, but the upside will be viewed as corrective. If we take out 1535, look for a push towards a measured move around the 1750 area, while inability to clear back above the 1535 will suggest a lower top is in place ahead of a fresh downside extension below 1098 and towards 110 further down. Cable. So the pound continues to consolidate after breaking above recent range highs at 152.70. The break above 52.70 does take some of the immediate pressure off the downside and could open the door for a more corrective gains towards the 54.85 to 156 area. But again, the market remains locked within a well-defined downtrend, and a lower top is ultimately sought out ahead of a bearish resumption below the recent 2015 low at 149.50. Dollar yen. So dollar yen continues to consolidate between the 7-year high from December at 121.85 and the low that we saw in mid-December at 115.55. Since that consolidation has been going, there's been a triangle formation and a contraction in volatility that has recently been broken last Friday above triangle resistance, which could suggest the market is poised for a retest of the recent range highs at 121.85. Ultimately, with the trend continuing to favor the top side, a break above 121.85 is seen towards the 125 area further up, and only a break back below 15.55 would take the immediate pressure off the top side in dollar yen. Euro Swiss. So Euro Swiss has been entered a new form of consolidation after recently breaking above some resistance at 102.50. The upside measure move objective for this market now is to 107, and in the interim the market is content on a consolidation. Ultimately, now previous resistance at 102.50 should act as support, with any setback seen well supported above this level in favor of a fresh upside extension towards 107. Only back below 102.50 would compromise the immediate newly adopted constructive outlook. Aussie dollar. So Aussie dollar clearly remains locked within a well-defined downtrend, but the market is in the process of consolidating off recent multi-year lows at 76.25. There is risk for additional corrective action if 78.76, that recent high from the 6th of February, is taken out, and that could open the door for further upside towards the 80 area. But ultimately, a lower top is sought out somewhere around 80 or ahead of 80 in favor of a fresh downside extension below 76.25, and then putting the focus on over the medium term on a retest of that critical psychological barrier at 70 further down. Dollar CAD. So dollar CAD over the past several sessions has deferred to a period of correction and consolidation after breaking to fresh multi-year lows at 128. The key focus of resistance above 128 is now the 2009 peak at 130.65, but we could still see a little bit more of a weakness in this market towards the 20-day moving average before a fresh higher low is sought out in favor of a bullish resumption. Kiwi dollar. So Kiwi has managed to extend its recovery off of the recent 4-year lows at 71.76, with the market now trading back towards some previous support around the 75 to 76 area. Any additional gains are viewed as corrective, with the market now locked within a well-defined downtrend, and a lower top is ideally sought out somewhere ahead of 76 in favor of a bearish resumption and back below 71.76 and towards the 70 handle further down. SPX 500. The S&P 500 continues to show signs of topping just off record highs, with rallies towards the 2070 area continuing to be very well capped. So long as the market holds below 2070 on a close basis, there is risk for a renewed downside extension back towards support, which comes in around the 1970 area. A break below the 16th of December 1968 low would, however, be required to open the door to confirm a topping outlook and open the door for an acceleration of declines back down towards the 1820 base from October. Gold. So gold has pulled back quite a bit in recent sessions, with the market trading all the way down to the 1228 area ahead of this latest minor bounce. But given the break that we saw a few weeks back above 1256, the market is looking constructive, and this pullback is viewed as the market looking for a fresh higher low ahead of a bullish resumption back above the recent highs that we saw at 1307, 1308, and then towards the key peak from the summer of 2014, July 2014, at 1345. That's all for today.